All right, now that let's use the previous example where you obtained a purchase order from a large company, we'll say Target, and how is that going to work? One, Home Coast can come in and help finance the purchase order and take you all the way from purchase order to final payment. But how does that work if you have trash credit or problem credit, or you've been rejected by banks, other financial institutions? Will Home Coast work with you? We'll be happy to work with anybody, regardless of their credit score. The thing that we look at is who are you doing business with. As long as the people that you're selling to, as long as the people that you plan to sell to are of high credit quality, we have no problem moving forward in a relationship. We'll even go as far as to pre-screen clients once we are in a relationship, so we can go ahead and underwrite people that you're debating doing business with, to let you know if they're going to pay you, and if they're going to pay you, and what amount of time they're going to pay you. So credit, your personal credit or your company's credit, is not of a concern to Home Coast. We are going to look at it just to see if any red flags get raised. In general, it's safe to assume that we're going to look straight through your credit to the credit quality of your account debtors. So now that you have a product that there's a noticeable demand for it, the typical first reaction of any entrepreneur is to bring in equity partners to the company. Whether this is an individual, a private equity group, a venture capital group, there are people out there that are willing to put money into products that have a proven track record. There are a couple pitfalls in all of these. On the individual investor side, the rates will probably be lower. You will more than likely maintain control, but the relationship will really have no added value. So, the investor gives you money and then stands back on the sidelines and hopes. That's good if you're capable of managing your business successfully. Another option, number two, is venture capitalists. If venture capitalists come in, they're going to, one, take complete control of the relationship, and they're going to take majority ownership as well. So they're going to take at least 51% control. You will stay on, but you're going to lose all kind of control that you would otherwise have if you would have gone a different route. Private equity firms are going to be somewhere in between the two. They'll help out some. It really just depends on the nature of the private equity firm. Home Coast is a fourth option to that. If you bring us a valid purchase order that we can actually underwrite, where the end product is going to be delivered, and that the manufacturer who is making the product is of high credit quality, and ideally a third party, we have no problem financing that invoice for you. We can take you from day 1 to day 90 and take you all the way from product creation to product in the stores. Didn't really like that one, but what can you do?
What do you mean?
Mark then walked in the middle. My eyes shot over.